Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, does making clothes for Olympians help your stock? And what are kids buying for back-to-school season? Telsey Advisory Group CEO Dana Telsey on the big winners and losers and insights on the health of the consumer. And later, big changes coming from Merck's top-selling medication and how weight loss drugs might help protect you against Alzheimer's. We'll look at how it's impacting investors in the biotech and healthcare sectors. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Elizabeth O'Brien, and Al Root. So, Ben, it was a horrible week for stock investors. The Nasdaq now officially in correction territory. What caused all the selling?
Well, Jack, it wasn't really a horrible week. Okay. It was really horrible 2 days. I mean, all this
seemed like a week.
Seemed like a week. I mean, it was horrible Thursday and Friday, and it wasn't even just the Nasdaq. The Russell 2000, remember we were all talking about this rotation into small caps, got crushed as well. The S&P, the Dow also finished down a lot. And really, there's two problems here. One, the market has been resting on two pillars. One is the AI tech trade. Everybody wants to own these big stocks, and when they go up, they carry the market with it. But then everyone's been talking about rotating into smaller stocks, about the economy doing, getting the soft landing, and that was going to be helpful too. And then all of a sudden, you pull out both those pillars, and the market goes down.
To your point about it not being completely a bad week, Jim Grant had a wonderful statistic that NVIDIA had a terrific rally that added more market value than any stock ever has in the U.S. market. And yet, of course, it's having a pretty bad week.
Yes, it is.
So the Fed raised rates, obviously, to fight inflation with the only tool it has, which tamps down the jobs market. Did it go too far?
I mean, that's the worry right now. We got this jobs report that was really not good. I mean, it missed the number of jobs added missed by a lot. The unemployment rate rose to 4.3%. And that really has people concerned, especially because we're also seeing weakness in other indicators. Like there's a manufacturing survey that came out on Thursday that actually started to sell off of its own. And so the concern now is that, the Fed hasn't gone soon enough, and it's left rates too high to the point where we now have more than a 60% chance that you're going to get a half-point cut at the meeting in September. And just a few weeks ago, we were debating whether there would even be a September cut at all.
So this week and that potential half-point cut reminds us why there's the 40 and the 60-40 portfolio. Bonds had a terrific week, rallying strongly. That's good for retirement accounts. Where do we go from here?
I mean, I think that what's the best thing about that is that we've been at a point where bonds weren't helping when the stock market went down. They would both fall at the same time. And that was problematic if you're looking for something to help you when your stocks weren't doing well. Now bonds are doing okay. TLT, that's the long bond ETF, gained over 5% this week. So it really did provide some ballast. And you know what else did well? Dividend stocks. They were actually flat on the week, which is not bad considering how much the market was down.
Let's take a closer look at some of those tech names that had a rough week. Elizabeth, 4 of the Mag 7 reported. Investors continue to be concerned that all this spending in AI might not get the payoff they'd thought maybe a few months ago.
That's right, Jack. It is an AI arms race. Meta alone plans to spend about $40 billion on capital expenditures this year. That is more than 20% of its expected revenue. And Alphabet shares fell when Wall Street analysts were surprised at the magnitude of its AI spending. Now, artificial intelligence hasn't really lived up to the hype. It hasn't contributed too much to earnings so far, but the promise is too big to ignore. And even within Microsoft's sort of disappointing revenue picture, there were signs of that. Overall, cloud revenue was disappointing, but AI was a bright spot within that. And some say Apple is sort of the Goldilocks of AI spending. It's not spending too much, not too little, just enough. And its third quarter spending was about $2.2 billion.
And Meta also had a decent week in terms of the stock market. An incredible statistic, 3.27 billion active daily users, 40% of people on Earth. Real quick, Intel, not a good week, not a good decade. Tell us about that.
Very bad day for Intel on Friday. It's worse since at least 1985 as it slashed jobs and cut dividends. Now, Intel used to be the leader in chips, but no longer. It hasn't been for a while. There's some hope that a new manufacturing process will turn things around and make it competitive again, but don't expect to see results on that until the second half of 2025. One thing to remember, though, with Intel is that the government has invested interest in it doing well and it having a domestic chip producer. So I don't think it's going to go away anytime soon.
Yeah, that's a good point. Al, We've talked about a lot of headwinds here. Few big companies have more headwinds than Boeing. A new CEO will take the reins on August 8th. What's on his to-do list?
Yeah, and I tried to memorize this, and I couldn't do it, so allow me to look down. Production, they're not making enough planes right now. Quality, we had the 737 MAX blowout. There's regulatory issues related to the MAX, but also they're trying to get new products approved. They have capital problems. Their debt has exploded since the pandemic. Engineering, they're going to need to do a new plane someday. The supply chain has been a headache for everyone in commercial aerospace since the pandemic. And oh, by the way, there's M&A. They need to reintegrate a supplier they spun out almost 20 years ago.
Other than that, Mrs.
Other than that, things are great.
Okay, so one of the management rules is you can't do everything. So the rule of three, you take your three top priorities, you focus like a laser on those. You just named 18. Yeah. What are the top three?
So Kelly Ortberg, former CEO of Rockwell Collins, universally praised choice. But to answer your question directly, production, supply chain, and quality. That's about getting planes to customers. It's about keeping your customers happy. It probably will have some ancillary benefits for the culture to see things. And then I'll throw the other one in there. You got to start articulating a plan for balance sheet repair. Too much debt, balance sheet repair, and production quality.
$58 billion in debt. Yeah, we'll give him a little time. He's got a lot of problems to fix.
And that's the thing. I don't think you can expect to see improvement like that. This is a 2026 improvement story.
All righty. Thanks, Al.